In this video, we are going to discuss about intraday stocks for 16th August 2022 and the day would be Tuesday. Now on the previous candle, that is on this day, on 12th August, and after that there was Saturday, Sunday, and today is Independence Day, so 3 days holiday, and after that market is going to open tomorrow. So in the last trading session, you can see that Nifty opened and closed positive, but well in a small range. In the last 2 days, it is trading in a small range. So after a huge rally, let's say from 1600, 800 to 1700, near about 17700 in a very short time span. So from 16800 to 17800, 17700 in a very short time span. So now a little bit of consolidation is needed going forward, and 17,800 is going to act as a strong resistance coming forward. So depending on how the market of the global market behaves, Nifty can open above 17,800 or below 17,800. So this is going to be the crucial level. This is going to be the crucial level. So if it opens above 17,800 and sustains well above this level, then we can expect 18,000 levels to come maybe this week itself. But if it opens kind of flat or below 17,800, then this is going to act as a good resistance, and we can see some consolidation or may even come down a little bit, like near 17,550 or so it can come down. But if it opens with a big gap down, then we can expect that it can be volatile and 17,800 will still be act as resistance going forward. So if we go in 1 hour chart, there you can see that the movement has been restricted. So it opened with a gap up, but that high could not be taken out. The first hour, the high that it made, it has faced resistance well within that, at that level only. And there is a moving average near 17,620. So 17,620, 17,630, these levels will act as support, and on the higher side 17,800 will act as resistance, unless there are some very good news or positive flow of Dow Jones or S&P 500 in the US market. We can expect Nifty to trade between this 200-point range for maybe 1 or 2 days. So let's go on a smaller time frame, and you can see that it opened gap up. It was quite a big gap up, and the first 15-minute, the high and low that was made, Nifty could not cross this 15-minute high throughout the entire day. So it came down, it went up, faced resistance from there, closed. Toward the end of the day, it tried to cross this but faced resistance and closed down. So tomorrow there is very less chance that it will open flat within this range. So if it opens flat, then it will cross this level with some going forward, and 17,800 level would be the target, and we can keep a 20-25 point stop loss, and our target would be near 17,800 tomorrow itself if it opens flat, but that chances is very low. So depending on how the US market pans out today, we can expect it to open gap up, a big gap up or a slightly gap up. The chance of gap down is also very low. So if it opens with a big gap up, like above 17,750, if it opens anywhere above 17,750, then chances are that it can cross 17,800 itself. And if it cross 17,800, and sustains will be above this level, takes some support and goes up, then 1800 could be the, sorry, 18,000 could be the target. And in this week, 18,085 could be the target for this week itself. So when I say for week, I mean this total week. So if it crosses 17,800, if it crosses 17,800 and then takes support near this level and sustains above 17,800, okay, we need a 15-minute close above this level and then continues going up, then we can expect 18,085 level with the target for this week itself. But if it opens not so high and with a moderate gap up, like near 17,720 or so, then or 17,730 or so, then we can expect 17,800 as target and we can buy accordingly. If it opens with a big gap down, then it will be range bound between 17,800 on the upside and 17,560 on the lower side. So this will be the range in which Nifty is expected to trade if it opens with a gap down, or maybe 17,720 and 17,560. This range we can expect Nifty to trade between. So what is the plan for tomorrow? So plan is, if it's a big gap up above 17,800, if it sustains, then we can buy. If it opens flat and goes up, then we can buy as soon as it crosses yesterday's high, keeping a 20-25 point stop loss, and 1:2 to 1:3 will be our target on the upside. Now, if it opens with a gap down, then we can wait for price action and go short intraday, or maybe we can go for a short strangle or a short straddle for the day. Now, let's look at Bank Nifty trading above this resistance level. So it closed below above 39,042. So 39,400 could be our immediate target. Now, if it closes or stays above 39,400, then 40,000 could be our next target, or maybe we can expect 40,120 to be the target if it closes above this level also. So above 39,400, if Bank Nifty sustains, then 40,120, this level can come in this week itself. So depending on where Bank Nifty opens, we can expect some consolidation or further up move from here, because you can see it's going on a steep trend line. So let's look at 1 hour chart, and in 1 hour chart you can see that though it has not much movement, but it is slowly and steadily going up. So if this level is taken out, then we can expect 39,400 level to be of some resistance on the upside. So now if we go to a 15-minute chart, you can see that after a gap up, it has sustained the up move. So now also there can be 3 cases. The first case, if it opens with a big gap up above 39,200, then we can expect it to break 39,400 and go up, continue its up move. But if it opens further high, like near 39,400, then from there some profit booking may come, and then we can look for price action, because after with a huge gap up, it can come down due to profit booking and then continue going up. So in that case, if it opens high, comes down, breaks the high of the day, then we can buy, keeping a 60 to 80 point stop loss, and our target would definitely be 1:3. There is very less chance of opening flat, but if it opens flat and starts going up, then we can buy as soon as previous day high is crossed, and this low will be our stop loss, which is maybe around 60 point, and our target would be 1:3 on the upside. Now, if it opens with a big gap down, then we can sell, keeping a target near 38,800 or 38 700 or this low, we can keep a target of keeping 50-point stop loss on the upside. But that chance is very less. And we can also go like a short straddle or short strangle to play for this range for this week. If it opens gap down. So the chances of opening gap up and very big gap up is high. So if it opens with very big gap up, then it will come down for profit booking. And then when it crosses again this high, then we can buy. And if it opens with a moderate gap up, then if it sustains and starts going high, we can buy with 60 to 80 point stop loss. And our target would be somewhere near 39,400. And if it opens gap down, we can go for short strangle of this range, like 38,400 to 39,400. We can go for this 1,000-point range or short strangle for this week, or we can even go for monthly. Now let's look at the stocks of the day. The first stock is UPL. Now you can see that UPL is trading on a trend line. Okay. UPL is trading on a trend line. This is a resistance zone. So if it crosses this zone, we can buy, and our target could be near this range. It is quite big, but for intraday, we'll pan out for 1/3 of this range. So if UPL crosses 790 on the upside, then we can buy UPL, keeping a 5-point stop loss, and our target would be 1:2, that is 10 points on the upside. The next stock is Axis Bank. With banking stocks going higher and Bank Nifty in a positive momentum, Axis Bank could move higher. As you can see, this is a neckline star formation. After a big candle, we can see a small candle. So we can even take a positional call. If it goes up, if it breaks this high and starts going up, we can keep the low of this small candle as stop loss, and we can even pan out for a positional target. There are multiple supports on RSI level, so we can expect it to go further higher up. So we can go for a positional call also. So tomorrow, if it crosses 762 on the intraday level, then we can buy, keeping 759 as our stop loss, and 1:2 will be our target on the upside. Now the exact call, the exact levels will be given on Instagram as reel. Now I'm posting Instagram reel for the exact levels, so you can check the Instagram reels for the exact level, but as for the analysis, you have to follow this video. So the next stock is Biocon. You can see that it is kind of was trading in a trend line, and it broke the trend line, and on the upper side there is resistance. So you can see from here, we can see a lower high, a lower high, lower high. It tried to break, but on a closing basis, it came down itself, couldn't sustain. Then from here, it made another lower high and is coming down. If it crosses 310 on the downside, on the intraday level, we can sell. Our target would be near this level also. So we can keep a 2-point stop loss, and our target would be 1:2 on the downside. And if this breaks to tomorrow, if this breaks and closes below this, then we can expect some further downfall. So for that, we can hold this in futures for a positional target, but for intraday, we can expect 2 rupees stop loss, and 1:2 would be enough for the day. The next stock is Pidilite Industries. Now you can see from the lower level, it kind of consolidated and went higher, and from this level, it has not much corrected. It went up, came down, and then a steep rally you can see. From here, you can see a steep rally without much of a pause, except here it paused. So even if this stock has to rise, then also it may come down for a little bit of price or time correction, and this momentum will cool down. Maybe it come near 60 level, and from there it can go up again. So if this low, this is the range in which it is trading. So if this low is crossed on the downside, we can expect some sharp profit booking. It will not be a big correction, but a small profit booking, which is good for an intraday sell. So tomorrow, if it crosses 2618, we are going to sell on the intraday, keeping a 10-point stop loss, and our target would be 1:2 on the downside. So that is for today. And a word of disclaimer that I am not a SEBI registered analyst. So all these are my personal views, and I am sharing this purely for educational purposes and not for any recommendation. If you take any position based on these views, then you should consult your financial advisor, as I will not be responsible for your profit or for your loss. So I hope you enjoyed this video, and thank you for watching.